speaker this evening is Austin Clements. He's an associate at 10110 Ventures, and he'll be talking to us about raising venture capital for data-driven startups. Please help me welcome Austin.
Hello, everybody. Thanks for coming to the presentation. It's been a great day, right? I've been here since, 7:30, 8 o'clock, so it's good. I'm wrapping up the day, but I'm glad that we still have a strong attendance in the presentation. So thank you for coming. I'm here to talk about raising venture capital for data-driven startups. My name is Austin Clements. My goal here is to have everyone leave better prepared to approach the fundraising process for raising capital for their own company. I'm going to walk through how we as a venture firm evaluate companies and also give some real-world examples for how we do things. To give you a little background about me, my name's Austin. I'm from LA. Actually, I grew up about a mile from here, just off Slauson. My first job in venture was at the NYU Innovation Venture Fund while I was in business school, and there we invested in student startups. Then I worked with New York Angels, which is an angel investment network, investing in all kinds of startups. Then I worked with CAA Ventures, that's the venture arm of the talent agency, while they were laying the foundation for the fund. And I also worked with Digital Entertainment Ventures, which is a New York-based venture fund, which focuses on media and entertainment. I came to LA, and now I'm with 10110 Ventures, which is a LA-based seed and Series A stage venture fund. So we invest across a lot of different industries. The common thread is they're usually data-driven companies. The two partners in the fund are Gil Elbaz, who you guys may have heard speak this morning, who's the CEO of Factual, and David Waxman, who's also another serial entrepreneur who's had a few companies and successes as well. So with that being said, since 2011, when I first started working in venture to now, I've probably looked at a couple of thousand different startups. So I'm here to hopefully shed some perspective on how we view things as we're going through different companies that we take a look at. So over the next 15 minutes, what I'd love to do is spend talking to you about what is a data-driven startup from our perspective, also how VCs evaluate companies. So there's two different ways that you could really look at things in terms of what excites you about a company. One is product market fit, another is founder market fit. In both of those, you see the markets there. So I want to first talk about market, and then I'll also talk about product, and then I'll talk about founders or the team. Then I want to go over how you can find the right investors for you, and then standing out from the crowd, what that looks like. So first, let's hop right into it. What is a data-driven startup? So data-driven startup, from our perspective, is if you look at our portfolio, you'll see that we're across every industry that you can think of. We've made investments. So we don't think of data-driven as a specific industry per se. What we think of is the most common thread is they typically own or they utilize a large domain-specific data set that leads to having a competitive strategic advantage. When we look at companies that we've been involved with, Factual, as I mentioned, Gil is the CEO. They're a data provider, naturally. They provide location data for a lot of different companies like Apple and Uber and Facebook. Data Science is another company that we've invested in. They sort of manipulate and analyze data and extract insights from it. AirMap is a data aggregator. They aggregate flight data for where you can and cannot fly your drone. So they aggregate airspace data. And Second Spectrum was also another company that we've invested in that spoke this morning around sports data. They had a really cool presentation, I thought. But also we invest in companies that often don't look like quote-unquote data companies. So if you search the websites of the three companies that you see at the bottom, you won't find the word data, right? Crexi is a commercial real estate exchange marketplace. Social Native connects social influencers with brands to get their word out a little bit more. And Honk is a roadside assistant. It's kind of like the new age version of AAA. So these companies as well excite us because of how they're positioning and leveraging their data to scale rapidly, but they're not necessarily, quote unquote, again, data companies. So that to say that we view data a lot as a strategy rather than just an industry specific thing. So evaluating the market. When we look at companies, we also always want to see a huge, exciting, or growing market to invest in. Usually that's growing in a few different ways. One, we want to look at the market forces, like the macro forces. Is there some huge technological breakthrough that makes your company relevant, whether it's one that your company did or one that's lots of people are able to use and apply? Or is there some sort of shift or change in consumer behavior, meaning is there something that like the shift from web to mobile being the primary interface that people deal with computers on, or I should say desktop to mobile, or regulation. For example, if there's a huge change in regulation, like Obamacare impacted the way that healthcare pays out, which opened up a whole new way for startups to enter into that space. We also look at the addressable market of your customers. So how big is it? Is it growing or shrinking? Even within a specific industry, there could be different segments that are growing and shrinking. For example, with video entertainment, my background's in media and entertainment. We looked at a lot of companies within video and entertainment. I probably wouldn't invest in a new cable company, right? Because they're not growing with a lot of new customers. They're kind of sustaining with the existing ones and contracting in some cases. But on the video entertainment side, again, we are looking at things like virtual reality. So we've made 2 investments in virtual reality that we're pretty excited by. Another way to look at market, that we evaluate the market, is through your competitive landscape. How do you view the competition? What are the incumbents in the industry look like? What are the people that are the leaders today? What are they doing? Also, we look at the recent entrants, what other startups are playing in your space, and the failures that have also happened. So we assume that there's been companies that have come in and tried to do what you're doing but may have failed. What lessons can we take away from what they're doing? We also want you to have an understanding or a thesis around what the longer dynamics look like within your industry. Do you suspect that it's going to be highly fragmented and there may be going to be 5 or 6 players over the long run that win out, or do you expect that there's going to be one player that's truly dominant? And then lastly, for market, we want to know what's your key insight for the market. What is it that you believe that maybe the rest of the market hasn't realized yet? As an example, there's a company that's not in our portfolio, just made the news about a week ago, called Zoox, which is an autonomous vehicle company. So they're approaching the space for an on-demand autonomous vehicle. They're building it from the ground up. There's obviously Uber, which does the on-demand transportation, and then there's plenty of automotive companies. And Uber is investing in autonomous vehicles. These other OEMs like Ford and GM are investing in autonomous vehicles as well. But Zoox fundamentally believes that if you build a company from the ground up, thinking about building an autonomous vehicle service, what does that look like? And a lot of decisions that you make about car design and things like that will be fundamentally different than if you're taking the approach of Uber or if you're taking the approach of just a traditional auto manufacturer. So moving on to evaluating the product. We like to look at the progress that your company has made to date. Have you released it publicly, or is it currently in development in a private beta? Also, we look at the growth metrics and engagement metrics, the partnerships that you may have, and want to see that you have a healthy pipeline of customers that you know how you're going to acquire them efficiently. We want to know your strategic roadmap. What are your priorities for this particular segment in time over the next 6 or 12 months? And also milestones. It's funny, we get a lot of questions around milestones, like what are good milestones? Should I come talk to you when I have 100,000 users or when I have 200 customers in one specific location? What are the milestones? And our response is usually, you have to tell us what's important. How do you think about the business and how it evolves? A lot of times milestones are coincide with fundraising events. So you could say something like, we're raising this first $500,000 to build the SDK, then we're going to raise $2 million to have the top 20 developers in this particular field build on top of it. And those are the milestones that you're trying to hit, and it makes sense in the whole narrative of what you're trying to do ultimately with the business. And then lastly, what does your data enable? What are you able to do with the specific data set that you're collecting that helps you separate yourselves from your competitors? The big obvious example, another speaker this morning, was Netflix. Unfortunately, we weren't investors in Netflix. That would have been nice. But Netflix was, they naturally use their data to provide better recommendations, and then also in purchasing decisions when they license content from major studios. Again, I was on the other side of negotiating with Netflix, and they have a lot of leverage because they have a lot of data. So another thing with product, we want to understand your revenue model and your cost structure. How are you planning to grow the business? Where's your revenue sources? Are you currently getting paid, or do you plan on getting paid in a year, or at what particular stage? And how does that relate to the cost structure? What are you spending money on? And what we obviously like to see is your revenue ramping up while your costs do not do the same thing. We are a little bit more linear or flat. And then also direct customer feedback. When we're talking about a product, particularly in an industry where we don't have a specific expertise, we oftentimes ask to call some of your customers. And we'll have conversations with them to ask them about how big exactly is this pain point, what did they think of your service, obviously, and what other services have they tried that might be similar. Evaluating the team. So naturally, the founders are the most important to us. Those are the people who we talk to the most, and the CEO in the visionary role is probably the person certainly the person who we most often interact with at the company. We like to understand whether you have any relevant experience or demonstrated ability within this particular field. Relevant experience within the particular field. If not, is there some sort of demonstrated ability? Have you shown or proven to be a leader? Have you shown that you can really get people excited? Which brings me to my next point about attracting and retaining talent. Is your vision inspiring enough, and are you exciting enough to bring really high quality people on board? It's oftentimes it's not so much what has the CEO done, but how has the CEO surrounded herself with somebody who's really brilliant and successful. History of collaboration. Again, not a prerequisite, but it's good to understand how familiar the founders are with each other. Do they have some sort of working relationship? Can they trust one another? And also full-time commitment. We see a lot of teams that aren't necessarily, there might be two people that are committed full-time and then some very high-profile person that they got involved because they knew it would look good, but they're not really fully committed to working on the business. And that's something that makes us pause a little bit. So also involved with the team, we look at advisors and investors. So who's invested in the company? Who do you have as a board of advisors? It's totally fine for a first-time founder to come in and want to take over or reshape a new industry where they've never worked a day in their life. But it's good to know that they have people that they could tap that do have that sort of experience. We also do personal reference calls in the same way that we call customers. Sometimes we call people who know you and can speak to your character and can speak to your work ethic and things like that. And then the last question we ask ourselves about the team is, where does our firm fit in? We love, obviously, data-driven companies, and if people approach us and they say that, we really would like for 10110 to invest because we like the way that you think about this particular field, or we like the way that the partnership here has all entrepreneurial backgrounds, we think that could add a lot to it, then that's great. But a lot of times, sometimes people will just approach us because they know that we invest money, and I've got to assume that if your company has nothing to do with anything we've ever invested in, then I was probably pretty low on your list of people to contact. I would love to think that everybody would love to talk to 10110 Ventures first, but the reality is I know that's not the case. So if you did get to us, either one, you were targeting us specifically, or two, you exhausted all your other possibilities. And so if it's the latter, then we're probably not going to be interested either. Oh, another question that we ask is, would we lead the round? We do lead rounds, and sometimes we participate in other syndicates. Identifying investors and standing out. So stage and size, I guess back to the leading rounds. You want to find investors that invest in the similar stage to where you actually are with your company and write the size checks or make the investment size that you're actually looking for. If you're looking to raise $500,000, then great, 10110 invests about $500,000. If you're looking to raise $1.5 million, we could even maybe participate in that round. If you're looking to raise $5 million, I don't care how much we love your company. There's no way that we're going to write a check for $2.5 million. That's just outside of the range of what we do. We would, however, possibly participate with a smaller check into a larger round. That's totally feasible. But know that if you're looking for a lead investor, understand how much they typically invest. You typically see the advice, find firms who invest in startups like yours. So one easy way to do that is to look at Crunchbase and look at all your competitors and then go and contact them. But the reality is nobody who's invested in a direct competitor is actually going to invest in your company. It's just too much conflict. But what you can do is find people who have invested in startups who think like yours or approach the market like yours. If you're saying if your approach to the market is, we're going to offer this free software suite and back it up by using the data, leveraging the data to create a marketplace and connect these buyers with these suppliers over here, then that sort of approach, if you can see that model in a different type of company, in a different type of industry, go and approach that investor and tell them like, hey, you invested in this company and this is how they do business. We're doing something similar and I think you might find it interesting. After you find the right firm, I should also say, you could also look at finding the right firm in a couple different ways. So there's data firms, and then there's, so 10110, naturally we invest in a lot of data-driven companies. There's also Data Collective, which is in the Bay Area. There's Bloomberg Beta, which is another data heavy, or Ame Cloud. Those are all venture firms that invest in data-driven startups. But then there are firms that are specific to your industry, whatever industry you're tackling, and you want to find out who those are too and approach those types of companies. After you find the right firm, you should find the right person within a firm. So if you approach a firm like Sequoia or Excel, it's a wide variety of partners with a wide variety of interests. Make sure you're talking to the person, who invests in companies similar to yours. So outreach begins early. The earlier you can start this process, the easier it'll be. There's a lot of times where you really want to get out there and you put all your information together and you work on it in isolation, and then you expect that you're going to present it to an investor and then they're going to sign the check right there. There's a famous post from a venture capitalist in LA named Mark Suster called "Invest in Lines, Not Dots." How many people have ever heard of that or familiar? A couple. Okay. So effectively what he's saying is when I first meet you, you're a dot. I have one data point on how effective you are, the story that you're telling me now. But if I get a chance to watch you over months and we keep interacting, I get to watch your progress, I get to learn how you behave, I get to learn whether you incorporate feedback that you receive from a lot of people and things like that. Ultimately, after a while, you become a line. And I get to see where that trajectory is and how you evolve and whether I'm excited by where that line is going or not. I encourage everybody to take a look at that blog post. It's really, really informative. Getting a warm introduction. This is one of the worst things in this industry, but it's one of the truest things in this industry. Getting a warm introduction is important. We all the time we get cold emails, and all the time we look at them, and all the time they don't result in us investing. And really, I try to isolate the reason for that. Part of it is typically they are on average a slightly lower quality than what we typically see. And so even if you were to put one in, I already have sort of a stigma attached to this probably isn't a great one, or they would have gotten a warm introduction. And by warm introduction, I mean a mutual connection actually makes the introduction. But you know, a lot of people say to themselves, like, I don't know any VCs, I don't know anybody who knows any VCs. Well, now everybody in this room knows one. I'll give you my email address at the end of the presentation. But in addition to that, when you do find people that you want to connect with, talk to some of their portfolio companies. Get to know those guys or gals, and they can often connect you and make an introduction as well. If you ask for their advice, again, this goes back to beginning early. Start this whole process a lot earlier than you think you'll need. Also find alternative ways to engage. I think most VCs want the information to be out there about what types of investments they do, what their thesis is, what sorts of companies interest them. So if you see a blog post about something, make a comment on that blog post and say, I'm building X. Or respond to somebody's tweet and say, you know, I'm doing something similar to that. And then lastly, I have build a deck for everyone's sake. There are a lot of resources online that tell you how to build a deck, keep it short, 5 to 10 slides, and I'm sorry, 10 to 20 slides, let's call it. And it'll tell you what to cover, but I think that going through the exercise of putting together a pitch deck, a PowerPoint presentation usually, actually helps you think about the business holistically, not just the technical aspects or the financial aspects or the staffing or anything like that. It helps you think about how all these things fit together because you know that you have to create the story. And that story helps with getting buy-in from everybody who you'll interact with. So that pretty much covers what I wanted to talk about today, but first I wanted to ask about how many people in here have worked for a venture-backed startup before? That's a few. That's probably 12, 15 hands. How many people have raised venture capital before? 1, 2, 3, 4. Okay, I'd love to start the conversation by asking some of these people, what would be your general advice? You know, I'd love to make this an interactive discussion. For those last 4 people that raised their hand, I'd love to go through. If you had some general advice for people that are raising for the first time, what was your experience like? What did I leave out? And call me out on anything if I totally lied. So, do you mind?
Who's going first?
My story's probably not that interesting.
Well, if there's any, if there's any general piece of advice, short piece of advice. Oh no, okay, no, I don't want to force you to do it. No, it's still okay. Do you mind? Okay. Is there anybody? Well, in the back, if you could just stand and say what you've just quick advice, even. Okay.
A lot harder than you think. Even though you're so in love with your idea, it's very hard to get other people as excited as you are. And they do exist, and I find that they do stay on board for a while, but it's hard. So.
Awesome. So thank you for sharing that. And I think that's absolutely true. And the reason why I love working in this industry is because I get to work around the most passionate people on earth, people that are literally putting everything that they have into their work and want to see it come to fruition, and they believe it to the depths of their core that this needs to come to life and needs to be successful. And and so it is hard when you believe in something that deeply and you talk to people who only give you a very short period of time to convince them, and then they walk away not convinced. I'm sure that there's a lot of people that I try to be courteous and respond to people and let them know, give them feedback and things like that. But at the end of the day, it's super difficult. And there are a few deals that are really hot deals, and maybe they have a slightly easier time because of their track record. But in a lot of cases, when you're starting out, particularly as a first-time founder going out to raise, there's not much that's simple about the process. Was there one more? Yeah, please share.
I mean, I think everyone needs a lot of patience going through the process. And I think it's selling all the time. So prepare yourself. The deck is the minimum thing that you can think about it. And be prepared for everything. I mean, you never know. I mean, I was one time in front of the right people, and they asked me a question, and I just didn't know how to answer. And I was totally, out of the room at that moment. I was totally blocked. It was a terrible meeting. And then in another meeting, I really won the money. I thought I was kind of closing and was like months ahead of me. So it's just patience. I think it's a selling process every single time. And as you said, I mean, knowing the people that is in the other side and just going through the process. And it takes months, sometimes more than you expected. So
Right.
patience.
Right. Start as early as possible, which is what I mentioned. Now, I'd love to open it up to questions about anything that I said, anything that I didn't say. Please let us know.
One thing is that, I'm totally new to this.
Sure.
I'm a business owner, but ours is a services. So I don't see it positive, so I don't need them at this point, at least I think so. But the question is, if there's a product is developed, or at what point do venture capital, there are very parts I'm sure it's too early, for you to come even and you will not be interested. What is the point where it really it's meaningful both for the person to come in and talk about it and for you guys also to look, so that it's not like, it's not like somebody walks in with an idea. I mean, that's way too early, I'm sure about it. So what is the point where it makes a sensible point for somebody to come and talk to you?
So the question is, at what point should you really start coming in and talking to VCs? There's several ways to answer that, and I think that a lot of things have to do with who you're talking to. If you're talking to someone who you know would be the perfect investor, not just because you like them, but you know their interest, you know their background, and you know that they at least very understand on a very detailed level what you do and why it's valuable, then I would say start talking to them as early as possible, because those are the people that'll get it. Those are the people that will say, I see where you're going with this, I can understand you, and I can understand your team, and though it's not fully fleshed out, even if you don't have a product in market, I understand where this fits in, I understand this landscape and everything about it. If you talk to me about a business in an industry that I know very, very little about, then I'm relying on the proof points of the actual company of what it's done so far. If you tell me every single neurosurgeon needs this and I don't have any background in neurosurgery, then I can't tell you whether it's relevant or not. But if you tell me we've 100% of the neurosurgeons that have used this have used it again, and then they've recommended it to 5 other people, I don't need to be a doctor to get that whatever it is, you're on to something. So I would say really it depends on at the level of person that you're talking to, which is why I would really encourage you to do your homework in terms of the investors that you want. And generally, I should also add that you're going to deal with these investors for quite some time. So these are people that you want to make sure that you're comfortable with dealing with too. And taking what they call dumb money is usually not a good option and rarely works out extremely well. Question over there.
What's your opinion on having a VC as an advisor to a early stage startup which doesn't have any sales, is still like in its infancy?
Does the VC did not invest?
The VC didn't invest. Like, there's no investment right now. The product is still being developed, and the VC is an advisor. So what's your opinion on that? Because like the VC would have like particular opinions about the direction you should go, whereas the founders would have different opinions. So like, how strongly should you regard the VC's like opinions? Like, obviously
Sure.
take them with a grain of salt, but like, what's your opinion on that?
I would say if your job is to invest in company, so okay, if you talk to 50 VCs about your particular business, you're going to get 25 different answers about what you should do, right? In different directions that they're going to try to pull you. And unless somebody's really willing to put their money where their mouth is, it's really hard for me to say that you should totally follow their guidance unless you, as the founder, believe that that's the right direction. They're not, you know, from the vantage point that we sit, we get to see a lot of companies. So we probably have seen all of your competitors, all the other people that are doing something in your space. So we do have some insight as to where this thing is going and what things look like they might work and what things don't. And I would take that. But if it's in terms of like product decisions or things from a investor, from a person who his job title is investor, but they have not invested, then I would have some reservation about following that very closely. Let's try to get a couple more quickly.
What would you consider your criteria to be for scalability of the business and the product, and what kind of market share that you would speculate that they think that they could accomplish?
So hugely. I think that, but not a particular number for market share. So if you, in terms of like scalability, how big does something need to be able to get? I'll give a general maybe rule of thumb that can give you the idea or sense of how a lot of VCs think. There's a VC named Peter Thiel who invests, and he has a couple of rules for making an investment decision. The first is my investment I've got to believe that my investment can return my fund. Meaning if I invest $5 million and my fund is a $200 million fund, I've got to believe that that $5 million can turn into a $200 million return. The second rule is that there are no other rules outside of that. And so that's the scope of things, is that a VC, for us, that's generally about accurate. Like, we've got to believe that this is going to be a huge return. We're investing $500,000, usually between $100,000 and $500,000. Let's call it $500,000, and our fund is about $20 million. So we've got to suspect that something's going to be on the level of that scale. So in terms of market share, theoretically, like if you got 1% of the automotive market, sales market, that would be probably bigger than enough to return the fund. But when you say that you're going to have a small market share and it's going to produce a great return, I'm not quite convinced. It wouldn't put me over the hump, because what I believe is if you have a small market share and you suspect that there's going to be 20 other competitors that you have, there might be somebody that comes into this huge market and has plans to take a huge part of the market share and might potentially squeeze you out. So the small market share would generally be something that would make me pause.
So like if you're feeling like somebody who might have a much larger fund probably wouldn't invest in things that you're going to invest in?
Yes. So the fund size makes a huge difference too. So our fund at 20 million versus another fund at 2 billion, the expectation for what the outcome has to be for us to consider it a successful investment are totally different. We had a company called Misfit exit for low 9 figures. It's like a Fitbit type of company, for those who don't know, and that was a very successful exit for us. Let's try to move on. Thank you. Go ahead.
How quick do you look for a return?
So let's call it about 5 to 7 years. That's a short answer to your question. If I could go into a little bit more detail, but I want to get some more questions.
Let's talk about partnerships, and do you expect some of the startups that have partnerships established, or do you see that as a red flag, or do you want to have that?
If a partnership is key to the narrative of how you ultimately become successful and return the type of investment like that I just described, then we're totally all for it. If the partnership is so large and your entire business depends on it functioning well, then that is concerning sometimes. Yeah.
All right, folks, we'll take one more question.
Okay.
Yeah, what kind of, what is your firm or venture capital provide advice and money to like clients that come along at some point that
If we're only providing money, then we're not doing our job. And I would encourage you not to take money from anybody who's just providing money, either at an angel level or a VC level. So typically, if you talk to our portfolio companies, what they would say that we provide that's most valuable is the experience of the two partners of the fund, Gil Elbaz and David Waxman. Between the two of them, they have 5 venture-backed startups sold to Microsoft, an IPO, one that ultimately failed, exit to Google, and an active CEO at Factual. So they've seen everything, every variation of problem that you could have with an employee, every variation of weird financing arrangement. They've just seen so much that we don't really get rattled when our founders come and talk to us, and they're really candid about what challenges they're seeing.
Basically the full gamut of business, anything that comes up in the course.
Pretty much anything that comes up in the course of a rapidly growing, rapidly scaling company, yes, which is a very unique set of things that don't apply to, like, if you owned a McDonald's or something like that. Thank you guys so much for coming out. I'll be around for a little bit to take questions if you guys want to chat.
All right, I have